Live.
Good morning. Good evening, everybody. Jeff Gibby here at Metastock. I'm sure that it's morning somewhere. Want to welcome you. Thanks for coming to today's class. Let's go ahead and get going with the legal disclaimer, shall we? Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So we got that part out of the way. Welcome to today's class. We have a very special guest, Vince Vora. Vince is somebody that we've been working with for a number of years here. Some things that I'll say about Vince, he's going to show you a methodology that he's been working on for 25 years and has been trading with for a number of years. The things I like about Vince is he's very, very he's a very good educator. He's going to talk to you a little bit about it. He's going to. I just love the way he actually talks about kind of the way he does. So, welcome to the room. If you guys have questions as we go, feel free to chat them along in the comments. And let's go ahead and get Vince in here. I did that whole thing muted.
Yeah, I think you did. I heard you, but on the PC, but not on the Mac. Yeah, I think you have to start over again.
Okay, no problem. Well, at least I have said good morning.
Yeah.
Good morning, good afternoon, or good evening, depending on where you're from. Thanks for coming today. I hope you're doing well. My name is Jeff Gibby. We're going to go ahead and be kicking off the webinar today. Let's start with our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or in information provided in connection with the company. So for those of you that are watching on YouTube, yeah, we just did that twice, once with the mic off and once with the mic on. But today we do have a very special guest, Vince Vora is here. Vince is somebody I have a lot of respect for. He's going to talk a little bit about some trading methods he developed over the course of 25 years. The one thing I will say I'm going to say two things about Vince. One is he's a very, very nice, down-to-earth individual. And two, he's a very good educator. I love kind of the thoroughness in which he goes through that. So with that being said, I'm going to go ahead and turn on the microphone. How are you doing today, Vince?
I'm doing well, Jeff. Thanks for having me on.
I don't know if I agree with you. You don't sound like you're doing too well.
Yeah, well, I am a little under the weather, but
Yeah.
Still glad to be here.
It's that time of year, right?
Absolutely.
All right. So I went ahead and I can see your screen. Give me just a second to get it. Okay. It looks perfect.
Okay.
I'm going to go ahead and let you go. I'll get out of the way.
Okay, excellent. Thanks again, and thanks for being here, everyone. Glad to be with you. And tonight, as Jeff said, I do want to share with you a strategy that I started putting together many, many years ago, over 20 years ago. And it's my baby. It's what I still trade with today. It's called Veracity. When I first started trading, I thought I knew a lot more than I did and took a very, very big loss. And so from that point on, I started to try to discover ways that I could trade with very little risk. And that's why it took so long for this to come together. The core of this strategy came together in about 2 weeks, but it took me many years to tweak it to a point where I'm not capping the upside, but I am capping my downside. In other words, many, many times with trading, when you limit your downside, you're limiting your upside as well. Well, we finally found a way to avoid that. So I'm glad to share it with you today. So I'm going to go through a few slides, and then we'll bring up the Metastock platform and I'll share with you many examples. I want this to be as interactive as possible. So as we go through this, if there's a symbol that you prefer to trade, that you'd like to see how Veracity does on that symbol, or something that you're thinking of getting into, by all means, just type it into the chat. I'll keep an eye on it as best I can, and I'll try to cover as many of those as possible. Okay. Please do remember that trading can be risky, so please don't trade with a system until you are completely comfortable with it. Now, as Jeff said, I'm Vince Vora. I'm the head trader here at Trading Wins. I've been in this business for well over 30 years. And along the way, I have put together many strategies and trading systems. But like I said, Veracity is my baby, so I'm really glad to share it with you. Over the past 6 or 7 years, I've really focused on coaching, and that's almost exclusively what I do now, aside from trading for myself. In today's presentation, I am going to begin with my money management rules. They're very brief. There's 5 of them, but they're super important. I never want to share a strategy without sharing my money management plan, because it goes hand in hand. And when you're missing one of those 2 pieces, things won't work well for you. So I'm going to share those with you. Then we're going to talk about the components of the system, which is really my search for the Holy Grail. As you know, it doesn't exist, but I think this is as close to it as I could get. I'm going to share with you how it works and why it works, but more importantly, how this can work for you. Okay, and along the way, if you have any questions, please type them into the chat box. I'll try to keep an eye on it. Jeff, feel free to interrupt me if there's any pressing questions. But let's get started with money management. So, like I said, 5 simple rules. Now, the first one, when I first bring it up, many people kind of snicker at it, but it's a very important piece of this. When you sit down to trade, if you're feeling a little off or distracted, that's when you tend to make the most mistakes. So turn off all distractions, make sure you're feeling well, and have a positive mindset. When you get started with that kind of mindset, things can only go well. If you're distracted, that's when you're going to make mistakes. Now, what I really find very important with trading is that you need to trade with an amount that you're comfortable with. In other words, the only time people get scared out of a trade or break their rules, because everyone, most people at least have a trading plan going into it, but not many people can have the discipline to follow it. That's where most traders go wrong. And the one main reason for that is they put too much money into a single trade, and they're worried about it. They get very nervous, and they make mistakes or they break their rules because of it. So always make sure that you're trading with an amount that feels completely insignificant to you. It could be, a few $100s for some of you. It could be many thousands for some of you. The amount doesn't matter, but it needs to feel insignificant for you. Now, I absolutely hate risk. I'll do anything to avoid it. But one of the ways I found to be most effective for me is not to allow myself to put any more than 5% of my overall account balance in any one trade. And the goal here, especially if you're just starting out, is to start out at that 5% mark, but slowly reduce that. As you grow your account, you want to reduce that percentage down to about 1%. And as you grow your account, the dollar amount you're going to put into that trade will still be significant. But when you can get to the point where you're only putting 1% of your overall account balance in any one trade, you've accomplished that second point where it is going to feel insignificant to you. And but yet you'll be trading with a decent amount of money that'll give you plenty of opportunity for profit. Now, there are many things that are out of our control when we trade. We don't control the market. We never will. And so to avoid getting hurt during those unexpected events that happen, something like a 9/11 that no one could have predicted ahead of time, the best way to guard your account is to always keep half of it in reserve or in cash. That way, if you get caught in such an event, number one, any loss you take will be small. And secondly, you'll still have at least half your account to put back into the market and make back that loss. Okay, with what I'm going to share with you today, it shouldn't take you very long to do that. And last but not least, you need to spread your trades out. Many times we've seen where we've had a big up day or a big down day in the market. Say the Dow's up, 400 or 500 points, the S&P's up 40, etc., and you get a lot of long side setups. Well, if you jump in and play 7, 8, 9 trades on that day, and the very next day the market retraces, like we've seen happen many, many times, you end up finding yourself in a huge hole right off the bat, and that's what you want to avoid. So when you're going through your daily search, you always want to compare those selections and only trade one, maximum two of the highest probability setups you can find for that time period. I trade mostly the daily, but even if it's say a 5-minute chart or 15-minute chart, you want to do the same. You want to find the one or two that'll give you the best opportunity for profit. And we'll go through exactly how we assess that with Veracity. Okay. A couple of other golden rules that we have, and this one's mostly for those of you who are just starting out. I like to say you'll never go broke taking profits. A lot of people do like to say that you will go broke taking small profits. That's not the case with Veracity because it's very, very conservative. You can be successful taking small profits, and I highly encourage you to do that, at least at the beginning, because it's going to do a couple of different things for you. Number one, it'll give you confidence in the system itself, but number two, and more importantly, it'll give you confidence in yourself as a trader, which will really take you far in this business. So if you're just starting out, bank those profits when you have them at the beginning. That'll help you grow your account a little quicker, gain that confidence, and you'll be off and running. But if there's one thing you take away from tonight's session, it's point number 2 here, which is this is not about you. If you're in this to be the world's greatest stock picker, it's not going to go very well for you. Okay. What I mean is we don't control the market. So what you want to make sure of is that you lose very little when it doesn't go your way. All right. But you still make a considerable when it does go your way. So in other words, it's all about execution. I'm giving you a plan. The indicator will tell you exactly when and where to get in and out. And what you should find as you go through this is that not only will you have more winners than losers, but your winners are generally bigger than your losers. And with that kind of math, it's kind of hard to go wrong. So this is not about whether you're right or wrong, but how much money you make when you're right compared to how much money you lose when you're wrong. So it's all about following the plan and being disciplined. If you can build the right habits, you'll do very well at this. Okay. Now let's talk about Veracity. There's a number of indicators and oscillators built into this that when they line up correctly, gives you a very, very high probability of profit. Now, I've back tested it, forward tested it, meaning traded it with real money over many, many years and made tweaks along the way. And Jeff and his team helped us program this for Metastock, and that's what I'm going to share with you today. So I know how well it works because I've been trading with it for many years. Tonight, my job is to show you exactly how it can work for you and what this is really designed to. And you can probably hear my dog in the background getting very excited about this. Is that unlike many of the other systems I've developed, this one is specifically developed to capture the bigger moves, while still keeping your losses to a minimum. Okay. So like I was saying at the beginning, when things don't go your way, it'll get you out very, very quickly, keeping those losses small. But when you catch a nice trend, it will normally keep you in for the bulk of that move. Okay. So it maximizes the safety component without limiting that upside. Okay. So not only will it help you identify some great short-term and longer-term opportunities. For those of you who might be managing a retirement account, saying, or trading longer term, more on the investing side, you're really going to love the monthly setups on this. It identifies some huge moves and keeps you in for the bulk of them. I'm going to try to share as many of them with you tonight as I can. And the other thing it can do is predict the major market moves. In other words, if you use this on an index like the S&P 500, it'll tell you when that next bull market is about to begin, when it's over, when the bear market starts, etc. It's fairly accurate, and I'll show you that too. Okay, so let's get to the Metastock platform here and show you. This is a chart of the SPYs, the ETF for the S&P 500. And what you see here on the chart, these green and red markings, is the actual veracity indicator. Now, let me just take a moment, zoom in a little, and share with you what these are. Throughout, you're going to see many of these setups. The idea is not to take all of them. In other words, I mean, you can if you want, you'll still do well. But along with this indicator, we're going to give you a training class that it will tell you exactly which trades you should take and which ones you shouldn't. The reason why there are usually many of these setups is because we didn't want to rule out certain trades, and on the programming side, we had to leave certain things in to allow for that. So what you're going to see here is you see these little green diamonds or red diamonds. Those are the setups. In other words, what that's telling you is it's just giving you a heads up that, hey, there may be a trade coming. We're not ready to jump in yet, but there may be a trade. If it's followed by a green arrow, for example, that's the time to actually go long. If it's followed by the red arrow, that's the time you want to go short. Okay, and then of course there's the little exit flags that'll tell you when to get out of these trades when it's time. And you'll also notice that when you get in, say, on a short trade like this, all the bars while you're in that trade will be painted red, right? If you're in a long trade, they'll all be painted green. This was one piece that Jeff and his team put in that I thought was great because it really helps you stay disciplined and not second guess yourself. You know, normally you get in, if you get a couple of green bars going your way, you're feeling great about it. But as soon as you get a couple of red pulling back on you, you start to panic and maybe get out of that trade. Seeing them all green like this just keeps you a little more disciplined. Okay. Now, along with this, what I like to do is always have a 20-period simple moving average. That's the blue line you see here, a 20-period simple moving average. And we like to use that for momentum, to identify momentum. So the more significant the slope in the direction of your trade, the better it is. So generally, I look for about a 45-degree angle. I consider that significant. Okay, you can take trades that have less of a slope. Certainly, you definitely want to take trades that have more of a 45-degree angle slope. But those are the trades that I want you to really focus on. Okay, so in other words, let me switch to the weekly chart here. By the way, the weekly chart on the index charts work phenomenal. You can bring up just about any index on a weekly basis. And when you have a nice solid trend in place, like we had for so long here on the SPYs, you'll just get some really nice setups. Like I said, for the bulk of the big move, it'll capture the bulk of it. Now, as you can see here, it's quick to get you out when things start to retrace. That's intentional. That's so you don't give back those profits. See, I don't care about getting out and getting right back in, you know, a bar later or a couple of bars later. It doesn't matter, especially now that, you know, most brokerage firms are going to zero commission. It really doesn't matter anymore. But if you just look at that full move here, you can see that we were in that move for, about 85 to 90% of it. So it caught the bulk of it. And that's what's important here. But as we go through the presentation and I show you different charts, different symbols, focus on the ones that have a slope on the 20-period moving average, either upward or downward. And those are the setups that I really want you to be taking. Those are the safest trades that you can take. Okay. So feel free to type in symbols and so on as we go through this, but I'm going to show you a few examples and talk about how I trade this on a daily basis. So here's Amazon, for example. Now, this is the weekly chart. And again, very solid setups here. Gets you out quick when it starts to go against you, and so that you keep the bulk of that profit. That's what I really love about this. But notice that when you have slope, these trades just, you have trend, you have momentum on your side. I mean, when you trade with trend and momentum, half the battle's won before you even get into the trade. Okay. Now, there are times like this that you'll see that it'll miss a certain section. That's because one or two of those indicators behind the scenes did not line up. That's not a bad thing. That is a good thing. Even don't worry about what you left on the table. Worry about what you catch. That's the main thing. Now, a lot of traders lose money during choppy areas or areas of consolidation, right? Because you get in, it goes against you, you get stopped out. You get in, it goes against you, you get stopped out. So even though you see a number of setups along that area, you do not want to take most of them. And we'll go over it in detail in the training course. I won't spend a lot of time on it here. But one simple rule you can follow is if the moving average is flat, you tend to stay away from those setups. There are some that will be the beginning of the next trend that you want to take. And I'll show you in the class exactly how to identify those. But I'll give you one tip here. And that's if you take your trend line tool and you just mark the highs of that consolidation zone, right? If you just mark the highs and the trigger on that new trade is a breakout out of those highs, is a breakout to new highs, that's a trade that generally you want to take, okay? Here's another example back here on the right side of the chart. When we were trending strongly, we had a retracement, it got us out of the trade, so we kept those profits. Then we kind of just went sideways for about a week, right? And so in here, if there's a break of the highs, then you're really interested in it. If it's flat without a break of the highs, you're not so interested in it. And it may run like crazy afterwards, but it doesn't matter. I want you to focus on the ones that just have a nice solid trend. Now, here's the longer time frame, the monthly. This is what I was talking about earlier. It's going to identify some huge trades for you. And what I really love is identifying what I like to say the next Apple or the next Amazon. So if you look at Amazon or Apple going way back, before they were very popular, there was always a flat area like this, just for years doing nothing, just going sideways. You also see it a lot in stocks that were beat up. So after, the dot-com bubble of 99, 2000, for example, where the Intels, the Ciscos, all those stocks, lost 90% of their value. Then for years, they just kind of went flat. And then once we broke above the highs of that consolidation area and the 20-period moving average started sloping higher, you start getting trades like this. And they're just so easy to stick with. And you don't have to stay in it for years. You can be scaling out along the way. And actually, I encourage you to do that. But if you're managing a longer term account, a retirement account, and you find a stock that, say, pays a healthy dividend, that gives you a signal like this, and not only are you seeing the stock appreciate in value, you're collecting the dividends, and along the way, you could be selling calls as well. I mean, it really, really works out well. But the main thing I want to show you is that it doesn't matter what time frame, okay, whether it's daily, weekly, monthly. Here's the 1 minute chart on Amazon. Let's zoom in. There's some really nice setups there as well. You know, you can do the 5 minute, 15 minute, hourly. It really doesn't matter what the time frame is or what the market is. You can trade this with stocks, with forex, futures. It really doesn't matter. Okay. So it works on anything. Let's look at a few more examples. Oops, let's try that again. Texas Instruments, TXN. And I'm just picking symbols out of the air, so feel free to type them in. And you'll notice that, especially recently, it's been a really choppy kind of market recently. We've been range bound for many months. If you look at the S&P and so on, there's a range. And so a lot of stocks are like this. So on the daily chart, there's a lot of little trades like this. Actually, that's not the daily chart. That's the hourly. Let me go to the daily. But again, I want you to focus on the ones where there's slope. If you look at the trades where there was slope, it's honestly going to be difficult to find many losers. Okay. Now, this is not 100% accurate. Nothing is, and I'm not telling you that this is. You will have losses with this, but if you follow the rules, and especially if you incorporate that money management plan that I gave you, and do not and never put more than 5% of your account balance in any one trade, you know, trade with only half your account, etc. The one promise I will make you is you will never take another big loss again. Okay, if you follow those rules, you won't take a big loss. That's the main thing for me. That was the only thing that allowed me to continue to trade after the big loss I took like 30 years ago. And so once you have a scar like that, it stays with you. And that, in a way, was the best thing that ever happened to me, because it's what allowed me to become the trader that I have. But here it is. This is what you want. When you catch a trend and you have slope like that, momentum like that, just wait for those setups along that sloping 20 and just follow those rules. There's another piece to this called the expert commentary, which I'll show you near the end. And that goes hand in hand with this. It kind of holds your hand throughout the whole trade and helps you walk through it. It's awesome. Let's go through a few more symbols. Here's MKC, McCormick and Company, the weekly chart. Again, when there's a bigger move, it's usually all over it. Sometimes it will miss it, but again, here was a setup that never triggered. All right, not all the indicators fell in line, but look at that moving average. Anyway, completely flat. There was no momentum there. So not only did we pull back here, we actually took out a low. So always keep the basics of trading in mind. You know, when you have a nice solid trend, you're usually going to see higher highs and higher lows. And when you switch to a lower high and especially then a lower low, that in itself is a trend reversal. So you don't want to necessarily jump on those trades. But again, here's the monthly. You go flat for a long time, right? Then you break out. Now, see this trade here with the green arrow here? I personally would not have taken that trade. Why? Number one, the 20 was negative, actually. It was sloping lower. And this wasn't a break of a high, right? So, yes, I would have missed that trade. Doesn't matter, because I would have caught this one and then these ones here. And even if I'm jumping in here, so I'm getting in and out, look how small those losses are compared to the wins. That's what I'm talking about when, you should have more winners than losers, but your winners should be bigger than your losers. Now, when you first start using this and you don't have full confidence in the indicator, you may not hang on to that trade all the way to the exit. And that's okay. Like I said, you can bank those profits when you have them. Bank them quickly, grow your account slowly, and then, but you want to get to the point where you're following not only the money management rules, but the signals of what you see on the chart. Okay, we have a few symbols coming in. I see Disney, IBM. Let's look at a few of those. Let's see what they look like. The other thing I want to share with you is this is the monthly on Disney. So there was one trade in here, and then it missed a portion here. What I want you to do, let me go to the daily and show you something. So let's say that we were just getting a short setup here, and we were going to consider whether or not to get into a trade. One of the things I want you to do is look back here. Since you have all these setups on your chart, I want you to look back and see, how many times we had a valid setup, meaning not in these consolidation zones. All these triggers we wouldn't have taken anyway. But when it was trending in the past, I want you to look at those setups and see how well they worked out, because there are going to be stocks that work better than others just based on the amount of volume they have on a daily basis, how well they trend, how heavily traded they are, etc. So when you're taking a trade, you want to look back and see how Veracity does with that particular symbol. Here's the weekly chart on Disney. Now, when you look at this, here's a great example that I want to show you. When it's consolidating like this, it still is going to pick off some trades for you, okay? But you'll notice that most of the triggers happen when you have a flat, or very little slope on that moving average. This is why a lot of traders get chewed up in times like these. So we want to avoid these. It's these times you want to be trading. And even during a down market, there's going to be symbols that have an upward trend like this, right? And vice versa. So there's always a trending market somewhere. And the other great part of this indicator is that Jeff and his team put together a scanner that I'll show you as well in a few minutes, and it'll literally take you seconds to identify some great plays. Let's look at some of the more popular stocks lately, like Microsoft, for example. Here's Microsoft, and here's the weekly. And, there was one miss there, but you had a couple of other really nice trades. Let's go back. Let's look at the monthly. There it is. Beautiful. So this one, going back to 2016, again, you don't have to hold the whole way through. But the other thing that I want to share with you is that a lot of our users that use Veracity, they use the higher time frames to identify the beginning of a trend, right? So like I was saying, on an index, for example, the S&P, if you get a new monthly signal, you're in for several months of upside. So you're in that bull phase. Works the same on an individual stock. So with Microsoft, for example, back here in August of 2016, we kicked off. We've been in that uptrend ever since. So it doesn't mean you have to trade off the monthly. But once you see that, you can then revert back to, say the daily time frame, and look for these long setups that have that slope in that 20-period moving average, okay? And so you're just going in and out from that point on. You can also use the weekly and then revert back to a lower time frame, or say the daily, revert back to an hourly, that sort of thing. A lot of people do that as well. Let's see, Theo wanted to look at, I think Shopify was one. Let's have a look at Shopify. There we go. There's Shopify. Now, this is the daily chart on Shopify. There are a few nice little signals in here. There was a recent setup short that did not trigger, has not triggered yet. Let's look at the weekly chart. Yeah, there was a nice catch there. Nice one back in here. Let's see. Monthly, not sure how much data we'll have. Yeah. See, it needs several months of data to actually give you the signal. So some of the newer issues, um, you won't be able to populate the indicator with it. What else? Theo wanted to look at Roku as well. Roku recently had a decent run. Yeah, there was that move upward on Roku. Now, with gaps, right? I'm not generally crazy about jumping into gaps, but if it's a gap to a new high, especially if it's an all-time high, fantastic, right? I'm really big on moves to new highs, especially all-time highs or all-time lows, which means there's no resistance overhead or no support down below. And so, if you're in a downward trend like this and you take out the lowest low, I mean, it's a no-brainer that it should keep going, right? So here we are now. And this is what I really like. You see, even though it identified the entry here later on, because there were two huge drops here, once that retracement started, it got us out immediately, right? Immediately. So you really keep those profits. And now what I would look for here is another setup to the short side, okay? The other thing you can do is look for popular charting patterns, for example, okay? So, if you have a head and shoulders pattern that is taking shape, or a double top, and then you get a valid signal, fantastic, right? All the better. The more evidence you can stack for your trade, the better, right? But look at that slope. That's what really matters to me, is the slope on that 20-period moving average. Someone else was asking for AVGO, I believe. Let's look at AVGO. Jeff, just let me know if there's any other questions from our YouTube audience, because I can't see those. Feel free to jump in whenever you want. The daily chart here has been a little choppy. See, this is an example of when I'm going to look back and say, well, how well did these signals work? This is not a good looking chart to me. This is not one I'd be crazy about taking. The weekly's a little better, but there's an awful lot of, jumps in and out here, a little more than I would like to see. So I like to stick to the cleanest ones. So not crazy about using that one there. Let's look at a few others. I don't know, some major Dow components like 3M, for example. Let me zoom in here. So again, when you have a slope in place, okay? So here's another great example. This might have been off an earnings announcement. So you're trending in one direction, you get a huge gap, but look how many previous lows you take out, right? And you have a significant slope, and you get that setup. Really a no-brainer trade there, and it was a really nice one. And again, keeps the bulk of those profits, does not let it go against you, right? Gets you out. Recently, here's been another one. Let's see what the weekly looks like. Yeah, there were some nice ones there. And monthly, yeah, some really good ones there as well. So again, it's a very, very, even though there's a number of oscillators and indicators behind this, it's the odds are stacked in your favor when you're trading with trend and momentum. Okay, so let's look at, say, a McDonald's. So you can feel very comfortable with this. I know when, it's a lot easier for me to say because I developed it and I've been trading with it for as long as I have. But for you to put your faith in it, again, you can do this with paper trading at the beginning. No need to put any real money in or go in very little. Use the money management plan, follow the rules, and I am very confident that you'll have a lot of success with this. Have a look at the weekly here again. It's designed to catch the bigger moves, okay? Not just keep you safe, but also not cap that upside. There it is, okay? Let's see, some forex pairs. Some of you are asking for some forex pairs. Let's look at Euro, JPY, I believe. Oops. Let's look at the Euro JPY. This is the daily chart on the Euro JPY. Again, when there's a trend, it's very easy to jump on board. It's really, really effective. Let me know what time frame you want to look at as well. We have a question from Ran, I believe, says, let's see, let me go back. I've watched a number of presentations. Can you show the indicator applied to the S&P E-mini intraday? Okay. Sure, we can do that. Let's see. ESU9 is what you wanted? Sure, let's look at it. Why not? Here it is, S&P E-mini. Oops, what am I missing here? ESU9. Okay, that's odd. Let's
try it all in capitalized.
all in capitalized.
Oh.
9.
It might require.
That's really odd. Never had an issue with that before. I mean, I can show you on the SPYs on 1 minute. I mean, the charts would look very similar. Very similar. And it depends on, the activity on any particular day. But what I will tell you is you don't want to trade this any differently on a 1 minute than you would on a daily, weekly, or monthly. In other words, you want to look for the same thing. Trend, momentum, you want that slope in your favor. You want to make sure there's enough volume. Obviously, the S&P 500 has a ton of volume, so it'll work very well on it. Let me try to go back. So, you're going to get the same types of setups along the way. Now, this is the ETF. This is the SPYs, not the mini, but the chart will look the same. Theo, the 4-hour time frame, sure, works the same. The hourly, it really doesn't matter. It really doesn't matter on the time frame. It doesn't matter if it's, say, let me show you gold, for example, a futures contract. Okay. Here's the daily. Again, real nice setups, no problem. Let's look at the hourly. You can usually tell by the candles themselves when there's enough volume behind something. When you get candles that are all very similar in size and that are mostly made up of bodies, not the wicks, right? Not those little lines at the top of the bottom, but mostly made up of bodies. There's a lot of volume. When you get candles that are all over the place in size and mostly made up of wicks or tails, there is not a lot of volume there, okay? But gold is very interesting to me and a market that I think we're in the midst of a major move higher here. So remember what I said at the beginning, when you go through a period of consolidation for many years and then you breach those highs. So right here, and you get that setup. This is a perfect one, right? Look at that. It was right there as we broke that high. Now this is on the monthly, which means, it wouldn't surprise me to get back to these highs and beyond. Now it's not going to happen, in a few days. There's a monthly chart, so it'll take many months. But along the way, using the daily time frame or whatever time frame you want, you should look for those setups to the long side. I think gold is on its way higher, for sure. Any other questions here? Let's see. Yes, there, you can use it for options, forex. Let's look at, for example, I don't know, JPY against the US dollar here. And now this is the daily time frame. We can see if there's how much volume there is. We can customize it, go to 15 minutes maybe, see what it looks like there. There you go. So again, no matter what, when you have that slope in your favor, like right here, see, this is to me one of my favorites. When you break out of an area of consolidation like this, you look at this area here, and the moving average was flat, right? We just kind of went silent for a while, right? And so then you get this set up here, and it takes off and breaks that high, but it was already in the trade. You don't want to take it, but it comes back to retest that level, and you get that setup. And look at the slope on the 20 at that time. Just a no-brainer trade, right? Excellent. So right now we're consolidating on the 15-minute time frame on the USD JPY chart. At some point, we're either going to break that high or break that low, and that's where you want to take advantage of that. All right. What else can I show you here? Cannabis stocks have been popular, right, for a little while. First to the upside, then to the downside. Let's look at a few of those. CGC is one of the more popular ones. Canopy Growth, right? This is the 15-minute time frame. Let's go to the daily. There it is. Some real nice moves to the downside there. Captures the bulk of it, right? Aurora Cannabis, ACB, is another very popular one. And there it is, right? So when it's trending and there's a slope on that 20, it's just follow the little signals. It's nice and easy. And again, remember, the comfort you have in this, or should have in this, is that if you get in and it turns around on you right away, you'll get that exit flag immediately. Now, one thing to remember, full disclosure, that you're at the mercy of the market. So you could get in short here, for example, and then overnight the company comes out with news and there's a big gap and it opens way up here. That can happen to you, but that's why we have the money management plan that you put along with this. Because if you're only putting a small percentage of your overall account in a trade like that, you're never going to take a big loss, right? That's the whole purpose for having the money management plan along with the indicator, okay? And if you don't trade options and only trade stock, I would highly encourage you to learn the options side, because not only can you protect yourself a lot more with options, but you can also leverage your winners with options dramatically. So it's fantastic that way. Let me quickly show you the other two pieces of this. If you go to the top left-hand corner, the power console here, number one, there's the Explore tab here. If we click on Explore, and the top section here are all the indicators programmed. You got to go to the bottom. It's in alphabetical order. Here are mine. You want the Vora Veracity. Now, there's the setups and there's the signals. The setups are those little diamonds, right? Where it's giving us a heads up that a trade may be coming. The signals are the ones that have already populated the arrow and are ready to jump in. So I want to search for the setups. I want to see what new trades are coming in. Then you go to this section here and you pick your markets. So I have the Dow Jones, I have the NASDAQ marked off, the S&P 500. Let's just do the Dow and the NASDAQ for now. You come to the right, select your time frame. I'll leave daily and I'll click on Start Exploration. And you'll see here that in a few seconds, there we go. I have 164 charts to review and it's done, right? And here are the results. So it rejected 157 of them, but 7 came out as potential setups. Now, when you have this, you have these columns that you can sort by. Long setups, short setups. When there's the number 1 in that column, it means it's that setup. It's long. If it's a 0, it's not. You notice how this one has 1 on the short side. So in other words, we had 6 longs, 1 short setup here. You can sort by price, or, and here's the great part of this, the slope. This is the slope on the 20-period moving average. Me and Jeff spent a lot of time trying to figure this out. I give most of the credit to him and his staff for figuring it out. And you can sort by that. Now, you want the biggest number possible, right? These ones aren't all that large, but the bigger the positive number means the more significant the slope higher. The larger the negative number means the bigger the slope lower. So you can cut and paste this into a watch list. You can print it, you can save it, or you can simply click on a chart and click open chart and it'll throw it in there. I'm not quite sure why it opened too. It's probably a different layout that I had before on Paychecks. Here it is, right? So Scanner is fantastic. It takes you literally a few seconds and you'll have your setups for whatever time frame you want. The other part that I love about this is the expert commentary. If you go to the top here, click on view, click expert commentary, it'll bring up this box. Now it'll talk a little bit about the indicator itself and trading wins and what we do. But what you really want to pay attention to is the text in the middle here. Now, if you notice on the far right of the chart, there's a little black triangle over the most recent candle. It's always going to default to the most recent candle. Now, you can move that around by just clicking above a different candle, or if you go back to the expert commentary window, there's the arrows at the top. I can move that little triangle forward or backward by clicking these arrows, okay? So when it's over a candle where there's nothing happening, there's no trade in place, you're going to see a blank space here in the middle, okay? But as soon as you you have a setup, for example, it's going to tell you that you have a setup and which kind. In other words, if it's a short setup, it'll be red text. If it's a long, it'll be green text. And it'll also tell you what you need to see to confirm that it's a valid trade setup. In other words, what you're waiting for that arrow to appear. And in this case, it's telling you that to confirm this is a valid shorting opportunity, you must wait for a trade below the setup bar's low to confirm a short signal. So say it's 8 p.m. at night and I'm seeing this and I want to put in an order for tomorrow morning when I'm going to be at work. I won't be available. I know the level to put my stop buy or my short sell order at in this case, right? My limit order. And if that price gets hit, my order will get activated, right? Then it'll also go on to tell you a bit about, once it confirms that you're in a trade. So when the arrow appears, it'll tell you that you're now in a short sell opportunity, and it'll talk about which options you might want to consider using if you're an options trader. Okay. And then as the trade progresses, as we, every new candle comes up, what it's going to do is give you a stop loss price along the way. So it really holds your hand along the way. It tells you what's going on. And as we move forward, you'll notice that the stop loss will change. So you see, first it was at 650, now it's 524, and the lower we go, the lower it now 492, etc. So you can use a trailing stop along the way, or you can just wait for the little exit flag. So some great tools to really help keep you disciplined. So I know we only had a very short amount of time here, but I hope I was able to show you exactly, how consistent this is. And trust me, if you combine it with that money management plan, not only will you never take a big loss again, but you're really putting the odds in your favor if you just follow those rules. So I'm going to pass it back to Jeff. Let him tell you exactly how you can get yourself a copy. And I will stick around, though. If there's any questions, I'll be happy to answer them.
Yeah.
Jeff?
Theo had one, but I think I'll just show him using my meta stock, if that's okay, because I've got it ready to go. Great job showing this off, too. Theo's question was, how do you find the stocks with the more momentum? And that had to go back with the scanning. So let me go here into our Power Console. I'm going to go ahead and I've got some reports that I've run. Again, as Vince had stated before, you've got the setups and you've got the signals. And I've run these. I ran them actually against the S&P 500 as we were getting ready to go live today. What I'm going to do is I'm going to go into the report of that and just kind of show you. Actually, so out of the S&P 500, if we ran it against the whole scan, there's literally 476 stocks that you don't have to look at. These are the actual signals. So these had a setup in the either yesterday's bar or the bar before. It was scanned on a daily basis. And right here you have your long buy setup. So if there's a 1 in this column, it's going to be a buy, a short, a close. This slope column is actually that calculation that Vince and I worked on. And I think Vince wanted to give me all the credit, but I think we had like 5 or 6 different iterations of this before we settled on something that works really, really well. But what we're doing is we're looking at the slope of that different moving average. If I remember correctly, we're doing a rise run calculation and looking at several points along that moving average. But the bottom line is the higher this number is, the better that moving average is going to be sloping up. So this 5, Cintas Ordinary, according to our calculations, will be your best upslope. Whereas if we reverse if you're looking for like a short signal, this minus 4.4 would be the highest downslope. So that should answer your question, Theo, in terms of how the scanner is going to help you find the stocks with the most momentum. It's not a perfect indicator, but we did a pretty good job of actually kind of narrowing down exactly how much or how little something is running up or down. And that's how you do it, Theo. So I hope that helped your question there. In terms of the offer that we've got today, so we did spend quite a bit of time with Vince actually putting together his whole template, the exploration, the trigger, the expert advisor, the commentary. Vince did a great job of coming up with that. Give him some examples of some good commentaries and came up with probably one of the best commentaries we've got. I love how it kind of gets really specific if you're an options trader about what deltas to look at, what expirations to look at, et cetera, et cetera, et cetera. What we came up with is a software that's been extremely popular. It's used exclusively by a lot of my sales staff to kind of help them identify things. So we are doing a little bit of a holiday upgrade promotion right now, where we're actually allowing people to do this. Normally, the Veracity system costs $19.97. Today, we're actually going to do a $799 special. Okay, with that, you're going to get complete access to the Vince Vora's training sessions on Veracity. You're going to get, in addition to that, access to his 1 month access to his video reports. You'll also, if you need it, you will give you 30 days access to Metastock. And we're going to back it up with our 30-day unconditional money back guarantee. So if for any reason you're not happy with it, you don't think it's going to help you in your trading, we'll actually give you a full refund, because we want to give you products that work and make sense for you. We understand you're traders and you want a good low risk, high reward return. So that's it. $7.99, a discount of over $1,000, a 30-day money back guarantee to try it. If you don't have Metastock, we'll give you 30 days of Metastock to actually try it. And this is an offer that we only offer right now through our staff here. It's such a special offer, we don't even want to put it on the internet. So you'll have to give us a call, 800-882-3040, or you can visit us direct at metastock.com/saleschat. I'd recommend you try it. And with our 30-day money back guarantee, what do you really have to lose? A little bit of time. That's really it. So with that, that's what I had to say. 1-800-882-3040. And Vince, any final thoughts?
Just to say that, like you were mentioning, along with it, you'll get a 30-day membership, Trading Winds Pro membership. So with that, what's included is nightly videos 5 times a week, every Sunday to Thursday, where I recap what happened in the markets that day and what I think you should focus on in the days ahead. I also share my trade ideas on those videos as well. And we have a private Facebook group where we all, with our members, share our trades, etc. So you'll have access to that. And we also do a course of the month for our members every month at no extra charge. So you'll get access to that as well. So that's all part of the this package, which includes the indicator and the training sessions, and the access to the Metastock real time, etc. So I hope you enjoy it.
I love the nightly videos. You do such a good job of giving trade ideas in them as well. So I appreciate you kind of spelling that out a little bit.
Thank you. Yeah, and thanks for having me on again. I really enjoy this.
Anytime. You're always welcome. For Vince, thank you for your time. We appreciate it. For those of you that joined in either through YouTube or GoToWebinar, thanks for spending an hour with us. I hope it was helpful for you. And as always, we'll see you at the next one.